Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading day. As I was saying on the or on the FACE webinar, really important levels were tested overnight, which is good. I'm always happy when that happens, because when what I view as key support or resistance being tested, when it's tested, I know that I need to start paying attention should we get breakouts. So let's talk about it. As far as the euro goes, the euro actually hit the 38% retracement. I am a little fearful that we actually might get a little bit lower than where we're at. Let's delete this little. I might have miscalculated yesterday. If you remember our conversation yesterday, I was like, okay, well, we're going to find some resistance, we're going to find some support, but we're going to end up being about mid-range ahead of the ECB tomorrow. I still feel that way. I do. I actually feel that we're going to be mid-range, but I guess the question is, where are we going to find support? And maybe support is going to be somewhere down here. And I got to take this magnet off. Okay. Maybe it's going to be close to the 50% retracement. Like I said, I might have just miscalculated it because I don't know, but my assumption is that we are going to, always be mid-range before a big event. So especially when you're dealing with the euro or, major currencies. So I know we wrote down yesterday, I think we wrote down 118 yesterday as support. Yeah, 118. And by the way, we wrote a couple levels yesterday. We wrote 118.30 and 118, right? So yesterday, just, before all this happened, we got to 118.35. So pretty damn close, right? And then we bounced. And then obviously in Asia and Europe, we sold off. Now, today, let's pay attention to, I'm not going to write down 118. I'm actually going to write down the 50% retracement, which is 117.86, but I'll write down 117.85. I think that's going to be support. I do still believe we're range bound. Now any resistance, any rally now up to 118.50 is going to find a seller, or is going to find a sellers. I'll just, for me, like if we got a rally to 118.50, I would be a seller personally. Right. Not saying we're going to get there. I'm just saying that if we got there, I would be a seller of euros up there. Okay, let's go to sterling. So here's the sterling. I personally, I still think the cable's trading really heavy. It still is. This support seems like it's going to give way. I mean, we came within just a couple of pips. That 137.50. I'm actually going to write down the 618. I've got to make the assumption that we're going to break. We're so close to it. Well, I guess I'll write down both, right? So let's just go 137. Oops. 137.10. I know it's 12, but 137.50. I got to round it a little bit. And then resistance now, I mean, if for some reason, and by the way, I need to, for some reason we got to rally up here, you got to take that as an opportunity. So that's going to be 138.15. Aussie. Well, yesterday we wrote down 74. Did we write down 74 cents yesterday? 74.20. Couldn't quite get up there. So now it's 74 cents seems really key. The support would be this 38% retracement. That comes in at 73.34. So let's go right down 73.35, 74 cents. And once again, we're range bound. Kiwi. Okay. Let me get rid of this. I want to get rid of that extension. So the problem that I see with the Kiwi, if you're bullish, this is like the bigger problem. That false breakout yesterday. So that means this is going to be high. That's a big resistance, 71.70. Let's get rid of this for now. This has been a hell of a rally off the lows. So support right now, and there's some horizontal support here. So it's going to be 70. I mean, the 24% retracement's holding. So we're going to have to write down both 70.80 and 70.30. Yeah. Okay. So 70.30, 70.80, and resistance is 71.70, and that should hold. That we should not break that now. We do, it becomes very bullish. That shouldn't break. We're going to keep us in range as well. Dollar Canadian ahead of the Bank of Canada. You guys already know this. That's key. So 127. I'm not even going to write that down. I'm going to write down the 50% because the last thing you want to happen is you don't want this to break and then hit that resistance in reverse, right? So we're going to write down 127.20. And we're going to put an asterisk next to it because if that breaks, then you have to get bullish near term. Support. Let's think about this really fast. So that spike low right there on that 4 hour and that spike low right there all come in at 126.25. That is also the 38% retracement. That means that is important support today. 130, 126.25. Okay. Yes, we are still range bound. Dollar Swiss. Ooh, look at the Swissy. Oh man. I was looking at that this morning thinking, that thing looks like it's going to break out. And it is. shoot. And I mean, I was looking at it. I didn't play it. I was just looking at it. Just, you know, there's a difference between looking at something and trading it and looking at it and then just missing it. Usually I rely on my gut instincts for these types of things, but I was looking at it going, man, I mean, I just didn't want any more dollar exposure, because I'm still long a little US dollar Norwegian krona. I still got a little dollar mex going on. So, I got to be careful of getting too aggressively long the dollar when the dollar is just kind of range bound. So, anyway, but this one looks like it could take off. So 92.40, then 92.80, which would be horizontal resistance, right? Of the triangle, basically. So 92.40, 92.80. And we're threatening to go bullish today on this because we're above this triangle. I'm not going to do it yet. I'm going to revert it back, but I'm just going to tell you guys that we're close. And 91.80, I think 91.85 needs to hold. So I'm going to put this back in a range, but you guys get my drift here. I think we are very, very close to flipping that to bullish. But you saw what happened in the dollar yen. Same type of thing can happen here. This is another one. I know I just tweeted about it. This is the US dollar Norwegian krona. And it came up and probed that 870. I don't know what if we wrote 872 or 873 yesterday. 872. So that we have to write down as 873. Multiple asterisk. And it's bearish, but I'd flip it right to bullish if we broke. If we broke and got a sustained break above here, I'd flip it right to bullish, because then a situation like this, you've caught all the bears off guard, right? You caught every bear off guard, and then gets above 874 and it turns bullish instantly. So support now. The 50% retracement seems to have found buyers. So let me. I mean, I have to give it all the way down to 863 because these are lows that are holding through here. This is a 78% retracement. So I'll write down 863. And 860. Dollar max. All right. Well, that's 884. And resistance now is going to be, oh, you know what? It's going to be up here, 2003. So 1984, 20.03, range. We are in a range. Dollar yen. This is the risk of like the Swissy. This is the exact, oops, I didn't mean to do that. This is the exact same risk the Swissies faced with. One second, guys. Okay. 1045. That's resistance there. And this is the same thing that I'm worried about with the Swissy. That's why I don't want to get carried away putting the dollar Swiss as bullish here, because we could just, you know, come up here and just fail, just like the dollar yen did, right? Support intraday though seems to be 110.10, then back down here 109.75. So 109.75, 110.10. Dollar index. So the dollar index broke back above this descending channel. So the 50% retracements here, the 618 is more important, I think, because you can see all these, these long wicks. All those long wicks, that's, you know, anything above 93.05. So I'm going to write down 93.05. Support on dips. Now you have to imagine if the dollar index does pull back, we would do this. $92.25, we should find support. Again, we're range bound. No, now one of the moves I did not expect yesterday, obviously, I mean, you know, the Bitcoin slide. I mean, and I've heard a lot of, you know, reasons why, but I think a lot of the reasons why is, you know, everybody's just kind of very bullish because it was above 50K. You obviously have the government, you know, buying, Salvador government buying Bitcoin. That's scary in itself. I mean, you want to talk about, you know, bankrupting a company or a country, and, you know, needing IMF support. I mean, that stuff's really, really scary to me. So, you know, and it's sad because you know, if something does happen, it's going to just completely wreck that country. But anyway, you can see how important this 43. I mean, I'm going to write down the lows now. Well, it's 42.9, but I'll write down 43K. And I think this was a very, very big warning to anybody who's bullish. That you can see, you know, Ethereum was a 25% move. I mean, this was a 20% correction in Bitcoin. Quick, right? So I'm going to keep us in range because, you know, again, we are now not making higher highs, and that's a risk. So 52,700 is going to be 52.7 is key resistance, and I'm flipping us to range. Let's take a look at silver. Big rejection yesterday at this trend line. That comes in at, here, let's get rid of this. That comes in at 24, let's just call it 25 bucks. Any dip back to 23 is going to find buyers from here. And gold, big rejection of resistance, which is at 1835. Support, and notice how we're just testing this broken trend line here. But below 1790 is 1770. So I'll write down both those numbers. 1770, 1790, 1435, right? And then range. I know you guys know how much I hate putting range in, but that's it. I mean, we are range bound. S&P, really big pivot off of support. So we know that today 4,500 is key, but more importantly, what keeps us bullish is this trend line. So that trend line comes in at 44.60 now. So it is ascending. 44.60, which is key. And then today is 4,500. Resistance at 45.50. $50 and then 46, and this is bullish. Now I know that we flipped a lot. We flipped, everything's on range here FX wise minus Norway, but we are very close to flipping bullish here. And the dollar Canadian could flip to bullish if we get above 127, but we have the Bank of Canada in 20 minutes. And the Aussie and the Kiwi, I guess they are still just range, and the Euros got to wait for the ECB. So you see a lot of range here, but that doesn't necessarily mean it's going to stick. Okay. Anyway, but your bias chart's finished. Stelios and Steve should be here. Good morning, guys.
Hello.
Good morning.
Hey, how you guys doing?
How are you doing?
I say good morning, but it's
Afternoon.
4:38 p.m.
Yes,
in Athens.
that is true.
It's almost the sun's about ready to go down.
Actually, it's already getting dark because we have these 2 days are very cloudy, rainy. We don't really have rain, but it's almost about to rain. So it already feels like it's getting closer to night.
Oh, wow. Wow, that's crazy. Okay, well, I'm going to let you guys take over, and just remember you got the Bank of Canada in about 20 minutes. So good luck, everybody, and I'll see you on the daily roundup.
Thank you, mate.
Thank you, Blaker. Hold on, what is this? Oh, yeah. So, what's changed from FA.C.E? Not much. I think there's a lot of excitement, or some excitement, with people saying, "Oh, this is going to be the start of a bear leg in equities." We had a couple of days. I'm not convinced at all, actually, and I wouldn't be surprised if very soon the buy the dip brigade comes in and just cleans everything up. I mean, we've seen this over and over again. We laugh about it. We talk about it every time, and it happens every time. Obviously, at some point, it will stop happening, but you need to have a trigger for that, and I don't see one yet. So Bank of Canada today, ECB tomorrow. There is a risk of some hawkishness from the ECB. I think we're getting closer to that, with inflation being as high as it is, and it's increasing. Basically, it's not that it's high; it's that the trajectory is going higher, and that's the case in most economies. Indeed. But on the other hand, we have people like Lagarde and the rest of the ECB people who I don't think they want to be hawkish. So just like with the Fed, they're kind of in a corner. They need to do something. They should have done something a lot earlier, a lot sooner, but they don't want to. So what do? They stick with the transitory story and give us another 3 months of, wait and see. Probably, it's very likely. So
they will delay admitting there is a problem for as long as the market permits them to do so. Yes, that's the only sure thing.
Yes, that's true. But yeah, for me, I mean, I wish I had other things to say, but I don't. Nothing has changed for me in anything. We're range bound in a lot of things, FX, in yields, in everything, and I'm struggling to find trade ideas or things to do.
Yeah, things are range bound. The dollar is still in some kind of rebound. The question is, what kind of rebound is this? Is this the beginning of another leg higher in this corrective move higher? Is it just a little bounce before we continue lower? The problem is that if you look at the majority of FX pairs, things are not very clear. I mean, does look like many of them look like they have probably bottomed, like it's the Aussie, the Kiwi. Even the pound had a very corrective type of move lower, the cable. But on the other hand, it's the market environment is extremely choppy, and there is no trend at the moment, right? I mean, there are moves in both directions, but when you examine these type of moves, none of them looks impulsive. So, where's the trend? Up, down? In my opinion, currently there is no trend. So I still think that we're within some kind of a consolidation. I'm still medium to long term bearish the dollar unquestionably, and bullish stocks, mostly due to inflation, of course, and the inflationary policies being followed. Now, having to do with developments, we did have a very big down day yesterday in gold. Not as much in silver. We had already looked at these two charts the day before yesterday. The short-term gold chart and the short-term silver chart. The short-term silver chart, as you see, has not broken down, but the short-term gold chart has done so. So, this another rejection here for gold at the same area, roughly like 80-30, 80-35, that area makes it very, very hard to be bullish in the short term yet. I'm still talking just about the short term, right? Because medium to long term, nothing has changed technically or, clearly fundamentally. Now, other than that, we were looking at equity markets yesterday. We indicated that there is a little bit of a rectangle near the high here in the case of the S&P, and the Nasdaq, was very, very similar. We got a, short-term break below this rectangle, as you see, and we're talking about today in the morning, so pre-market. That's why I would be somewhat skeptical about it, also for the fact that the Nasdaq is nowhere near the bottom of its rectangle. As you see, it held up much, much better, right? We're currently in the middle of the rectangle, actually. So, as you said, Stelios, a little bit of equity weakness, but, is there something to write home about? Has there any technical developments taken place? Absolutely not, especially when you look at the daily. We talked about that yesterday as well, that, if we want to be talking about developments that really can make even the slightest dent in the trend, then you are in essence forced to look at the daily chart. We have this big wedge, and the trend line support is, some distance off. And until that breaks, at the very least that breaks, there is absolutely no reason why you would want to be bearish in, in more than a few hour time frame. So, yeah. Now, yesterday, and Blake already mentioned that, we had, of course, these cryptocurrency type of events happening with no apparent cause. Of course, there is an apparent cause. This is not a real market. I mean, this is not a market of investors. This is mostly a market of sentiment-driven teenagers and people with likewise mindset, in my opinion. And on top of that, there are people that know what they're doing and they're riding these markets for volatility because they want to trade, volatile markets, and there's absolutely nothing wrong with that, right? But the basic thesis of the people that really believe in it and not just go in and out and treat it as a scalping, as a scalper's paradise market type of thing is the people that are like, religiously devoted to the idea. And, these type of markets tend to create these type of events, meaning a 20% move lower within a matter of seconds, minutes, hours, depends on the time and the event. Sometimes it takes literally seconds. Some other times it might take a few minutes. On occasion, it might take, a day or two, rarely. Usually it's faster than that. Now, if you remember, we talked about it last week, and I even made a mention yesterday for Bitcoin and Ethereum, saying that, listen, they remain bullish for the time being, but there is absolutely crazy to try to chase these markets up here. There is absolutely no risk reward in doing so. And I, even if I was bullish and I want to be involved with these markets to the upside, there is no chance that I would be even considering the possibility of buying unless Bitcoin at the very least retests this broken triangle trendline resistance and support, and Ethereum backtests these broken triangles. As you see, different type of triangles. One is a flat top triangle, the other one isn't. It's a flat bottom triangle, right? So but in any case, like both of them are triangles. So guess what? Not only they did that, but they sliced through it, albeit rather temporarily, right? So Ethereum, for the time being, disregarding that big wick that we left behind lower, is holding this 3370 previous resistance. So it currently seems to be working as support. And in the case of Bitcoin, we did convincingly slice through and close below the trendline resistance of the triangle, but the previous trendline support seems to be doing the same type of job that the trendline resistance does for Ethereum. Now the question is, are we done? Was this the move? It's a very hard question to answer because of the nature that I briefly explained before of these markets. Under normal circumstances, in a normal market, a violent sell-off like the one we had here would almost necessarily be followed by more bearish price action in the days ahead. Why? Because in normal markets, when this happens, what happens is that you get people that are long and they get scared, right? Because they see a very violent move lower. And that includes both people that found themselves being out of the money because they chased the market high, and people that are in the money, right? So under normal circumstances, those that found themselves in very little time out of the money, the instinct of survival immediately triggers the flight to safety kind of mechanism, meaning the moment you get a rebound following this type of price action, what they want to do is get out of the market, if possible, unscathed at break even, right? So the moment the instrument that sold off hard rebounds, they find it a good opportunity to get rid of their position and feel relieved that they managed to do so at a decent price. Now, people that were in the money, let's say you bought Bitcoin, let's say at the lows of yesterday's day, right? Let's assume that. And you were so happy that you were like 20% in the money, and you were starting to, because this is how the human brain works, you were starting to dream about, more potential upside, right? Oh, how much am I going to make here? If it moves another 30%, I might do that, X, Y, Z, or whatever. Now, suddenly, within a matter of a few minutes, your profits have completely evaporated, right? Completely. So you go from being 20% in the money to being at break even. So you get a rebound of, let's say, 5, 6, 7, 8%. And the same person that was dreaming about 50% gains ends up thinking that, something, having had like being able to leave the market with a 7, 8% profit within, let's say, 10 days of having this is not that bad. And if yesterday taught me something, is that as the 20% profit became a break-even trade within a matter of minutes, perhaps the break-even trade can then become a minus 20% position. So people that haven't even been out of the money due to the move, they also will take advantage of the little rebound to take some profits out of the market and, look for a quieter period of time to rebuy it, right? Now that happens in a normal market. I'm not really sure what's going to happen in the Bitcoin and Ethereum market. But, the general analysis I just went through is, the general psychology that people follow whenever these type of moves happen. Now, again, though, having said all that and, being somewhat reluctant that we can have the, this expected type of behavior in these type of markets, I would still tend to believe that it's not that easy to get a sell-off of that magnitude as the one we got yesterday with zero follow-through. Yes, it is a lot more likely to happen in these markets, meaning cryptocurrency markets, than it would be if we're talking about FX pairs. But I still think there is a bigger danger here for a much deeper corrective move. So basically, if we got an orderly, let's say we're talking about Ethereum, if we got an orderly pullback towards 3370, I would be, more than happy to buy it if it was a market I wanted to participate in. Now, the way we got ourselves back there, nah, I wouldn't be doing so. I really wouldn't, because I would expect that more follow-through is likely. In any case, Michael actually is asking about the Nikkei, and funny enough, the Nikkei was one of the markets I had noted down to talk about today. And why is that? Why did I specifically want to mention the Nikkei? Because of this, because I forgot to mention it yesterday, because we had this development, right? We had talked some time ago, I would assume somewhere there, end of August, about the Nikkei and how it is most likely within a corrective move that's eventually going to break higher. This is exactly what we drew back then. And guess what? The eventually is now, right? The Nikkei has broken higher. And in my opinion, looking at the move higher, looking at the move lower, you have absolutely no reason to treat this as anything else than a legitimate breakout, right? So next upside target, the all-time high at 30, no, not all-time high, sorry, the multi-year high at 30,728, whatever it is. After that, 31,778, the 127% extension. 161.8 at 33,113. So yeah, this is a legitimate breakout, and in my opinion, you should respect it and you shouldn't fade it, Michael. Also, since we're talking about the Nikkei, it's going to be a good segue to go to the USD yen, and from that to the Euro yen, since Jamie is asking about it. And the USD yen is testing this channel trend line resistance as we speak. So we might get a breakout here, right? Imminently. Now, you'll notice that 10-year yields are also testing at the same time important trend line resistance. Not coincidentally, obviously, that these two things are more or less happening at the same time. I think there is a very decent chance of a breakout here in the USD yen, which of course will favor further strength in the case of the Nikkei. And now going to your question having to do with the euro yen, I'll have to tell you that there is a very, very good chance. I mentioned the yen pairs multiple times during the past several days. I specifically mentioned how most of them seem like they have a decent chance of having already bottomed out, and euro yen is no exception to that. Euro yen has found a low at this nice confluence of supports below 128. It is likely breaking higher, although we've seen the last 3-4 days create some type of a consolidation here, but it's likely breaking higher from what you see from this descending channel. And in my opinion, this recent consolidation has a much higher chance of getting resolved to the upside as well. And gun for the next upside targets, the next one being the 61.8 at 131.75. The one after that being the rather recent high at 134.12, so on and so forth, right? So there is absolutely no way that I would be bearish this market, right? I think being bullish is the right way to go here until proven otherwise, right? Because of course, you know, every thesis has to have, you know, whenever you have a thesis in your mind about any type of market, you always have to have some kind of a rule as well, meaning where is my thesis wrong, right? Where am I wrong? Where does my idea of how this is going to evolve needs to be questioned, right? When do I need to start doing some redrawing because I might have drawn the wrong conclusions about how this is working out, right? So whenever you have a thesis, make sure you also have a pivot point that should at least make you rethink if your thesis is correct. So let me see what else. Hey, Steve. Hey, Jadin. Can you look at ARC and IWO? Sure. I'll be more than glad to do so. I'll be more than glad to do so. So here is ARC. Just reiterating here that the bigger picture is obviously one of a very bullish market. We've seen it multiple times before, but I'd rather draw this even now. And why would I want to do this? To show the impulsive nature of the previous move higher, right? It was orderly and channeled, very strong, but orderly and channeled at some point, and then it went completely vertical. And as usually, Stelios, we just got data, right?
Hold on. Yeah, Bank of Canada. Hold on. Let's see.
And Jolt openings,
more
or less as expected. Yeah, overnight rate remains the same.
Yeah. See USD CAD.
QE pace unchanged. Rates remain the same. Do we have any specific commentary? Give me a second. I'll come back to this. To ARC.
One of the things we should mention regarding the Bank of Canada is they do have the federal or national election here in like 2 weeks. So a lot of people were thinking that the Bank of Canada wasn't going to do anything, and they haven't. They're just keeping rates unchanged.
Yeah, and as it seems, the market doesn't really seem impressed by anything here. I mean, we don't seem to be doing much. We're currently, for the time being, we're back testing this broken trend line support as resistance. Unless we break back above, we have a daily close above it. I find no reason why I would turn overly bullish. But if we do close again back within this, let's say, channel, you know, I would become again very skeptical about what we've been recently seeing unfold here. Anyhow, as it seems, the market is not going to be moving today post the BOC, as it seems it's a non-event so far. Now, going back to ARC. So ARC, impulsive, extremely vertical type of finish to this market before we started this move lower. Now, the problem with this move lower is that it remains very hard to decipher. It was easy. This first move lower was impulsive. I expected more downside following this triangle. We did get that. We did get another leg lower. We ended up retracing 50% of the move higher in a decent amount of time. And then things started getting more complicated. We got this move higher. We got this recent consolidation. We're currently trading above it. So as long as that's the case, I would favor at least what we drew over there. I would favor at least one more leg higher, but we need more evidence to consider if this leg higher is going to be a part of another bigger leg higher that has already started, because let's say we bottomed out over there, or we're still within a bigger complex corrective move, right? So in my opinion, having to do with this market, I'm going to use the cliche expression, I think the jury is still out with what's happening here. If we have found a low or we haven't found a low yet. Okay, that's what I think about ARC. IWO. Now, this is a market that's in a corrective consolidation. The problem being resistance is indeterminate for the time being. Why is that? Because you can draw lines, as many lines as you want by choosing 2 points, right? So the validity of this line is as big as the validity of this line. You understand what I mean? Meaning there is no way to know that this corrective move is over. So I pay more attention to the trend line support, because I think that is a much more solid trend line, passing from more levels, from more points. And I think as long as we trade above it, the trend remains bullish and we're in a corrective consolidation. In order for me to say that we have found a low and we're moving higher, I would want to see momentum as well, right? So it's not only about how we draw this trend line, it's also about seeing some momentum. Of course, if the market is kind enough to give us the type of price action that allows us to build a much more reliable trend line, then I'll feel much more confident in assuming that I will know when we get a valid breakout. This is an example, the one I'm drawing at the moment. So let's say we have this type of price action, and then we can draw this trend line resistance. You know what I mean? That passes from 3 points. Then I'm going to be like, okay, this trend line resistance now seems to be a valid one because it passes from 3 points, right? And then the next time we test this and we cross over it, I'm going to feel much more confident that this is a valid breakout. My pleasure, mate. Anything else I can answer for you, guys, girls? Okay, then. So I wish you all a wonderful rest of the day, and I'll catch up with you again tomorrow.
Thank you, Steve.
Bye-bye.
Thank you, everybody.